Hey guys, welcome back to the channel McNallie Money, the official home of power mining analysis. A very exciting episode in store for you today. We're going to be covering the all-new Ethereum monthly production report from Bit Digital. In addition to that, we just received some big news from American BTC or ABTC, wasting no time after starting or initiating trading yesterday. In addition to that, an interesting development in the core scientific CoreWeave saga, and an update on our upcoming trip to New York, along with the HC Wainwright panel we're looking most forward to. A lot to talk about. Before we get into it, take a second, hit the like button, guys. Big help to myself and the channel. If you're not already subscribed, McNallie Money, feel free to join and let us know in the comments section below if you're currently holding any of these companies and how you're feeling about the Bitcoin mining space as a whole. With that being said, let's get into today's video. All right, guys, away we go. Thursday afternoon. This is a really exciting podcast, an interesting layout. We've got some recent miner news we wanted to talk about. We've got some upcoming trips, and we've got some insight that we wanted to share in terms of our top Bitcoin mining picks right now. So a lot to discuss. Before we get into the meat and potatoes here, Bitcoin itself, again, fluttering under the 110,000. We've seen it as low as 108, as high as 112. But as you pointed out just prior, Anthony, higher highs and higher lows look to be forming.
Yeah, it looks like it's steadily on the increase over this last 5 days, and we might see another breakout in the next day or so, maybe above 113 onwards. And who knows from there, maybe another all-time high, which is currently 124,000. So yeah, it's just solidly holding above the 5,000 mark for quite a few months now. So it looks like we've got a particular hold on that. But yeah, not too worried on a day-to-day basis. I don't tend to focus too much on the Bitcoin price or the miners' price day-to-day basis. And we can see from the miners at the moment, everyone bar DMG is in the red, and DMG we've talked about them a lot on the channel. Possibly one of the most undervalued miners out there. When you look at the assets on the balance sheet, market capitalization, they have a massive positive net asset value. So, you invest $1 in DMG, you're getting $2 worth of assets. And you can't say that for any other miner on there. Looking at the reds though, American BTC had a quite an interesting first day, all the way up to $14. Had 6 halts yesterday on the stock exchange with the volatility. And we can see today, it's still in that volatile range there, down, nearly 19% at the time of the podcast, around the $6.55. But we'll wait and see. This is literally 24 hours after listing, so we're not going to pay too much attention. And we'll come on to a little bit more about ABTC shortly.
I was going to say I can foresee a few more halts in that company's future. I also wanted to mention IREN, Cipher, two of the darlings over the last week or so in the retail space, giving back a little bit of ground today as well. So we talk about Bitcoin breaking out. Looks like the miners are doing a little bit of breaking down today instead of the breaking out. Now, we had a phenomenal podcast last night, two actually. One was an interview with Patrick Fleury, CFO of TeraWulf. We talked specifically about this Fluidstack Google deal, everything from who's in the room, how the discussion works, the power dynamics, all the way to the financial side of things, future expansion. I got to say one thing about Patrick. He's transparent. Many of those answers, I was even surprised at how much detail and granularity he was giving us, but an excellent discussion.
Oh, thoroughly enjoyed it, and you're right. Every time we have Patrick on, or every time we even listen to him on a Spaces meeting, he never dodges the question. He answers the question. I've been shocked sometimes when people have asked him like ridiculous questions. He just answers the question. He doesn't veer away from it. And it was a great discussion. Great to understand that different type of strategy than the one that we heard from Dan last week. The co-location deal. Two, sizable deals now, one with Core 42, one with Fluidstack supported by Google. And just having that Google name there, when you've got $1 trillion company around the table and you're going out to look at financing to build these facilities for them, One thing that Patrick highlighted last night, that potentially could save them 150 million just in interest per year, having that name associated with the deal. Gives you a better cost of capital. So, over a 10-year deal, that's over $1 billion in savings there. So, yeah, and the fact that he was prepared to sort of look at the valuation of the company at the moment, where he saw it from his perspective, and if people out there thinking they might be a bit late of getting into TeraWulf at $9 when literally 2 years ago you could have bought it for 52, 53 cents a share, listen to the podcast and then think how much late you really are. I think it's potential like Bitcoin. I think you may be still early in this one, but have a look through the video. He comes up with a lot of information that, easy to digest and easy to understand, and you can see why they've moved into that top echelon in terms of companies in the industry.
Oh yeah, one of the best guests we have on the channel, and even breaking down the share price and share price targets like that was just phenomenal. Now we've been working away behind the scenes here, planning some trips. Last year we were fortunate to go down, tour some facilities. We have something in store for you guys coming up this year in November. We're calling it the Power Mining Analysis Texas Tour 2.0. We're going to be going down, touring a number of facilities from your top miners, doing some recording, on-site footage, interviews, compiling that, similar to what we did last year with Core Scientific and Riot. This year, though, Anthony, the X factor is we're bringing Kevin Dede along.
Yeah, no, Kevin's awesome. We were on a panel with Kevin at Mining Disrupt. Kevin's one of the senior analysts for HC Wainwright, one of the biggest investment banks out there. They cover the majority of the mining companies. And when he heard on the grapevine we were planning this, he came forward and said, "Is there any chance of me getting a seat on the bus going to these sites?" And we'd love to have you on, Kevin. It's it'd be a pleasure to to have that chance to spend some quality time, get to understand your perspective, understand that Wall Street perspective. We've met many of them before, and you get a couple of minutes to have a little chat about a miner here and there. But we're going to have 4 or 5 days with Kevin. He's going to be equally interested to go to some of these sites because some of these sites are also miners that he analyzes. So this is going to be a win-win for everyone. So I'm really looking forward to it. As you can see from the picture there, I'm already happy.
Oh, we've got our Texas hats on. We've got Kevin in the back seat there with the American flag. And for any of our viewers who are down in the Dallas or Austin area, we'd love to meet up. And like you say, Anthony, we're there all week. So this will be a great opportunity. Tour the facilities, learn more about these mining locations, get some insight from Wall Street, and document the whole thing for you guys to watch. I'm sure we'll have some laughs along the way. The other trip we've got coming up actually next week and going to be going to your first NFL game is good old New York.
Yeah, we're literally. I'll be flying out in 36 hours time, effectively, to New York on Saturday morning, and yeah, looking forward to. This will be our second trip to New York this year, so we're getting used to this travel business now. It seems to be happening more and more. But this is a sort of like a sort of payback, really, for the trip in November. Because this is the HD Wainwright Conference, and Kevin Dede, our good friend, has managed to get 2 of the social media analysts a seat at the conference there, which we're really looking forward to. And if you look at the panel there, on view there, that's got some heavy hitters on there.
It certainly does. So the conference itself, we couldn't be more happy to go to. Some of the headline speakers include George Bush and Michael Saylor. But for us, Anthony, a specific panel of interest is this one, talking about Bitcoin mining and high performance computing. Many of the panelists, essentially all but one, have been on the channel or worked with us closely. So for today's video, we wanted to go around the table here and talk about why we're so excited about this panel, what we're looking for from each one of these panelists, and give you guys some insights that we've collected over the last 18 months along the way. So the first one here, Russell Can, we think very highly of, obviously integral to the Core Scientific team. We've spoken with him many times, both in person and on the podcast. An interesting update from the SEC submission today in relation to 2Cs. We talked about this being the largest individual shareholder within Core Scientific, having some concerns about the upcoming CoreWeave vote.
Yeah, and they've been putting a lot of this out on social media. Remember, we talked about the details of the merger or the acquisition by CoreWeave, which has had director approval, but it hasn't had shareholder approval. That will happen probably during Q4. But obviously, from 2Cs and actually from a lot of retail investors, we're seeing that not too many of them are happy with the deal at the moment. Just to give you the background, and literally a week before the announcement, there were some rumours about a deal in place, and the share price, went all the way up to $18-19. And we could certainly support that. If you look at the deal itself, that they had the 590 megawatts. I mean, that's the biggest deal out there. I mean, Patrick and the team at TeraWulf have got a great deal, but this was the biggest, the first deal, the one that had the most interest. A deal that gave them significant amounts of capital up front to build and refurbish these facilities and then pay it back as part of the revenue stream they were going to receive once the energization had occurred. You couldn't find fault with it. I mean, potentially you were looking at a 75 to 80% net operating income. So that's after all your costs, and bear in mind, you were bringing in $850 million of revenue per year over that 12-year contract period. And then you had potentially 2 5-year extensions to that. So 22 years, $850 million per year. That was sizable. Then we come to the deal itself, and that was announced on the 7th of July. And we have talked quite a lot about this deal already, and the fact that it was a lot of obviously strong arm from CoreWeave, and the fact that they were at the time the only person coming forward to look at core scientific sites. And they offered, a deal with a floating share price, but offered a deal at the time on the 7th of July when the CoreWeave share price was $165.18, valuing the contract at $9 billion. They're initially transferring 0.1235 CoreWeave shares for every Core Scientific share held. And that would give the Core Scientific share a value of $20.40. Now, on the scheme of things, that was probably a fair price. Bear in mind, you've got to remember, a lot of these facilities haven't been built yet. So, shareholders could walk away with either take the CoreWeave shares and live through the fact that CoreWeave are going to grow massively over the next few years, or take their profit, $20.40, and walk away. But the deal wasn't a fixed price. It was a floating price, and a floating price until the shareholders approve. And the day the shareholders approve, that would be the agreement then. And so what we did, we put together a table, and we've highlighted this probably 5 or 6 times over the last 2 months since that deal was first announced. And as you can see today, if the deal was agreed today, with the share price of CoreWeave down literally 50%, down to $87.58, that gives that $9 billion contract a value now of $4.77 billion, literally half the amount. And therefore, the indicative price of the Core Scientific share is $10.82. Now, if you look at the share price of Core Scientific today, it's $13.53. That tells me that potentially the market believes that the shareholders won't vote that deal through, and there's an expectation that CoreWeave are going to have to come back to the table and offer a little bit more to get that deal through approvals, because at the moment I can't see the benefits to the Core Scientific shareholders, and neither can some of the other significant shareholders there. I'd be more inclined to keep the deal open and work through the contract as it's laid out until a better deal comes through. I mean, they've got a fantastic deal there. The other part of this is, why is this being put forward now by this large individual investor? And they also believe not only was the process flawed in terms of the fact that they didn't follow the normal process that you would do once you go through a deliberation process, you see if there's other providers out there that might come in. It sounds like this was done fairly quickly. Bear in mind, we've now got the full, effectively, timetable of when everything occurred. The fact that when the CEO of CoreWeave was going to suggest we're going to make an offer, and the date that it was agreed, and there wasn't a lot of time between those 2 periods. So there is an important fact there. And also the fact that the deal for directors appeared to be and we've covered this as well, you know, a little too lucrative.
Yeah, it certainly did. It's an interesting filing here, and as we say, time will tell. It's important if you are holding Core Scientific shares that you partake in the vote here, but there is definitely a disconnect between, as you can see on your table, where the shares should be trading versus where they actually are, and implying that that concern from the market. Now, moving around the table, you'll also see our good friend Sam Tabar. We recently had him on talking about this all-in Ethereum strategy on the Bit Digital side of things. We'll talk about WhiteFiber in a second. Interesting on this panelist note, they introduce him as the CEO of WhiteFiber with no mention of Bit Digital. However, Bit Digital did come out with something very interesting today, essentially an Ethereum report card for the month, similar to what we've seen in the Bitcoin mining space. But obviously, they've now traded their Bitcoin for Ethereum, showing a highlight of their HODL, the valuation, the percentage return on their staking, and some of the key metrics involved in the Ethereum treasury operations.
Yeah, this is very similar to a sort of like the Bitcoin mining operational update, but for Ethereum. And this is something that maybe some of the other miners who are moving into the HPC space can come up with a similar type of operational report on a monthly basis, to give shareholders that, you know, that information they require. So in terms of Bit Digital, we know they've got over 120,000 Ethereum held, 121,252 with a value of 532 million. Now, they haven't staked all that, 86% of it staked, and the staking rewards just for the month of August were 249 Ethereum. And, you know, the sharper people out there, if you look at the price of Ethereum, you know, over $4,000, that's just over $1 million of revenue per month just on Ethereum staking. And if you look at that from an annualized position, that's probably 12, 13, 14 million dollars, depending on the price of Ethereum, but a really good way of bringing in more revenues to the company. Now, they also mentioned how many WYFI shares they own, which is 27 million. And a key factor we spoke about with regards to Bit Digital ever since we've been covering them is they don't have debt on the balance sheet, like a number of peer miners in the space do have. And so, you know, they're obviously using the Bit Digital, the main company, you know, for growing this Ethereum HODL and also for staking. And that's what we'll tend to get now, these updates around those two areas there. Are they buying more Ethereum? They'll probably come up with a number of strategies to do that, probably not dissimilar from what we've seen some of the other treasury companies do. But they're obviously key now is to grow Ethereum incessantly over the next few years and become one of the largest holders of Ethereum from a treasury company perspective.
Yeah, it certainly is. The interesting number that caught my attention there, the number of Wi-Fi shares, 27 million. You multiply that out by 1662 or whatever they're at right now. Quick math in the top of my head, Anthony, $448 million. That's a significant size position in that company as well. And we're going to start to see that arbitrage trade similar to kind of what we see with a Core Scientific Core Weave, in the fact that these two companies are now kind of married at the hip there. The other point I wanted to bring up in relation to Bit Digital, they've got an interesting slide in their most recent deck talking about the Ethereum acquisition opportunities and how they can create this MNAV concept within the company. So MNAV we've talked about in the frame of Bitcoin, essentially the valuation of Bitcoin versus market cap of the company. This is the same philosophy with Ethereum. However, the plan isn't necessarily maybe going how a lot of these treasury companies thought at this point.
Yeah, and you know, this is the key. What the treasury management companies have fallen to is the MNAV, and we've seen some of the early adopters had significantly high MNAVs. I mean, the Smarter Web company, a London-based company, they're valued at about £5 million until they bought their first tranche of Bitcoin, and within about a month, it had grown to over £1 billion in value. But the MNAV at that time was around about 25, which meant the value of the company was 25 times the value of the HODL, and that's really what the company was made up of, not much else. What we have seen in the last sort of six to 8 weeks is the fact that these MNAVs now started to get closer and closer to one, and one meaning the value of your treasury is the value of the company. And You know, we're even starting to see, some of the MNAVs go to less than one, and that starts becoming a problem. We need to get, one of these treasury management experts onto the podcast and give us their view as to, what they see at the moment and how they think that this will change going forward. And we have reached out to Dylan Leclerc, who's the senior Bitcoin strategy advisor to Metaplanet, to see if he'll come on the channel. He's agreed. We just need to work out a date with Dylan to do that, but we're getting on soon and getting to explain, educate us all as to how this is going to pan out over this next 6 to 12 months.
Yeah, it's an interesting point you bring up. These companies all position themselves as a strategic way to get additional or outsized exposure to the underlying asset, either Ethereum or Bitcoin. However, if they're trading below NAV, the question is, why would I invest in your company versus buying the underlying asset? It becomes a very difficult proposition for the investor community. Many of these companies relying on raises from the investment community to purchase the ongoing flywheel structure, so to speak. So it'll be interesting to see a few years out or potentially in the next pullback bear cycle how this number of treasury companies really manage to exist or survive through the pullback. The next member around the table at HC Wainwright we're looking forward to listening to is Matt Schultz. He was recently appointed from chairman to CEO of CleanSpark. We just covered their production results yesterday. Again, a strong showing, consistent results. We noticed on social media a lot of people really attaching to some of the commentary from Matt Schultz, stating that we're now focused on maximizing our contracted power through mining and exploration of other verticals. Now, we've got a clip from the SALT conference we wanted to play quickly and then get your opinion on this one.
Now, to the point about AI, I think the next logical step that you'll see, and that our team, we've got a pretty sophisticated team of AI guys led by Taylor Monig, but I think what you'll see is that some of the infrastructure that we have that makes more sense and gives us a higher ROI per megawatt than Bitcoin mining currently does, we're certainly analyzing those very actively.
So as we can see here, Anthony, there is some general interest or potential interest in opening up the portfolio to other use cases. We've actually been hearing in the industry here that some of the locations in Georgia, specifically around Atlanta, may have potential.
Yeah, and they have a number of sites there. I mean, it wasn't that long ago, 2024, where they actually went out and purchased 5 Georgia data centers. And they may not be massive in size, so don't think of this as a sort of like a Sweetwater or a Lake Mariner in terms of size. Look at it as more as the ability to, to create maybe a tier 3 data center, maybe a 5 to 10 megawatts, to provide that proof of concept, proof of strategy, to then go out there if they can get a pipeline of significant power in a location that, again, can deliver this type of strategy, go for a bigger co-location deal. But a lot of these companies need to learn how to walk before they can run, and maybe CleanSpark will come in from this direction. Start to build up in a smaller scale, proof of concept. Know they can deliver it because they've certainly delivered on the Bitcoin mining. There's no reason why they can't, but I would suggest that they prove that they can deliver it and then grow that concept into something much more bigger.
Yeah, and that was something we heard was integral to TeraWulf's growth as well. This the Wulf Den, then CB1, CB2, that gradual ramp up. We pulled some information on the CleanSpark data centers here. You can see 2 specifically in Atlanta, a number of other ones in Georgia as a state, but these ones specifically have a few attributes, including proximity, obviously, to Atlanta or that large urban hub, and the reliance on nuclear power, which again is a big asset in the data center space when you talk about reliability and redundancy for power. So you look at latency, you look at proximity, again, maybe not the scale or size of a Sweetwater or Horizon 1, but as we're going to see later in the presentation with Wi-Fi or WhiteFiber, there is a route in urban areas to making some of these smaller locations work.
Yeah, and if I remember rightly, Atlanta has got the airports with the most passengers throughput on an annual basis. Plenty of potential for high performance compute in that region, and the more companies that can deliver it, probably the better.
Yeah, maybe land down an air traffic control contract in Atlanta there. That would be a difficult job. I've heard that same stat. You may have told me that one actually traveling. Now, we just had the pleasure of hosting Mara Salman Khan, the CFO. It's nice to get some of these CFOs on the channel. I know, obviously, you've got a strong background in accounting, a little bit over my head, but it's great commentary, great discussion to be a fly on the wall. Salman talked a lot about strategy. Mara, similar to CleanSpark, laid out of the gate into the HPC AI realm, but they've seemed to have found their niche, not so much focusing on colocation or CSP, but more so the back end, partnering with the infrastructure, the data center provider, balancing the load, soaking up any additional power or energy to co-locate their Bitcoin mining alongside a lot of these data centers.
Yeah, they've been focusing lately on these three sort of different strategies. The first one is really where they're going to use some of their Bitcoin to deliver Bitcoin yield. And they've already allocated about 2,000 Bitcoin to this. And this strategy combines the long-term value appreciation with a disciplined effort towards earning some returns on that. The second one is really to partner to develop, as you rightly say, a load management system. So, Bitcoin miners are able to switch on and switch off instantly. Less than 30 seconds, you can turn off the whole fleet. 30 seconds later, you can turn on back on the whole fleet. It doesn't require a long period to do that. And where they're located, maybe near some data centers that don't have significant requirement for power all the time because of usage, they could probably look at how to utilize that load system. And so Mara have sort of, going into a strategic Mara have gone into a strategic collaboration with Tay Power Solutions to develop this high-frequency, real-time, responsive load management system. And the third part is they're also looking to partner to develop power load balancing. And again, they've announced a partnership with LG Nova, Pado AI Orchestration to develop power load balancing as a service. And Pado's platform is actually designed to use artificial intelligence and machine learning to orchestrate power, grid services, and distributed energy resources. So three totally different strategies there, but three that we hadn't associated with pretty much any of the miners over the last few years. So it looks like Mara's starting to really go out there and develop some new strategies. What's the next thing they can move into? They've also, as we rightly know, bought into a high-performance compute data center company, part of the EDF family, and they've got a 64% stake in that company with the opportunity to raise that to 75% over the next year or so. So they're moving in all different directions at the moment. Let's hope these strategies pay off in the long run.
Yeah, let's hope. Kevin Dede, our good travel companion there, he actually picked Mara as one of his top stocks in the sector to watch, citing a lot of these upcoming catalyst or deal potential opportunities. You can see Mara really looking for an angle. They've got that massive HODL. They're trying to put that to use. They've got this huge footprint in terms of operation, trying to put that to use. It'll be interesting to see where they can find that opportunity. Similar almost to a CleanSpark or a Riot even, they've got a lot of Bitcoin on balance sheet. You start to talk about the amount of CapEx to fund some of these AI data centers. These companies actually have the money, if needed, to potentially start up a small trial operation like you mentioned there, Anthony. The next one we're looking forward to, both hopefully to catch a dinner and to see on the panel here, Tyler Page from Cipher Mining. This probably second to IREN as the most popular stock in the retail community, at least in the Bitcoin mining sector. I guess between Open, Cipher, and IREN, we should have them all covered with our upcoming interview with Eric Jackson on the 15th. But a lot of people in the sector and even outside of Bitcoin mining starting to look at Tyler Page as a very viable player in the AI space.
Yeah, I mean, they've got, a number of particularly good sites there. They've got the Black Pearl site. Phase one's already been complete. That's 150 megawatts towards Bitcoin mining, and that hash rate's going quite nicely. Phase two is 150 megawatts also from the site that can be used for high performance compute. And their second site, Barbara Lake, which is 300 megawatts, that gives them potential now of 150 to 450 megawatts, ready to start looking at putting HPC into those locations. And when we had Tyler on the podcast, he was suggesting that, by the end of the year, they'll have an announcement. Now, one person we do know who's been watching this with a close eye is Mike Alfred. He's a director at IREN, but he's also a firm fan of Cipher and the work they're doing. And he thinks the odds of them achieving a major AI co-location deal by that suggested megawatts by the end of September are approaching 55%, or slightly better than even money. By October, 70%, and by November, 90%. So he's sort of like basically putting percentages as to where Tyler has actually stated. He thinks there'll be a name by the end of the year, and we're not going to doubt him on that. But yeah, real potential there. On top of that, they've got a number of other sites that are sort of like they've purchased some land leases for some big sites, some 500 megawatt sites. But obviously, if they can get this first deal out of the way and start getting that produced, then they can start looking further ahead and deliver more and more as we go along.
Yeah, I think back to the comments from Patrick Fleury, walk before we run. They've obviously got the 150 there at Black Pearl. Then you talk about Barbara Lake. Really, if they can execute on those two, they've got a long runway ahead of them in terms of those 500 megawatt sites. They've got three inked in for future development down the road. Now, the next member of this discussion at the HC Wainwright Conference, we can't wait to listen to Asher Janut. We've had him on the channel a number of times talking about both HUD 8 and ABTC. We just covered ABTC's initial trading day yesterday. They came out with a 1-2 punch here, a massive announcement on day 2, adding 14 exahash in one go here.
Yeah, this is pretty amazing, really. Nobody saw this coming in terms of the announcement today, but acquired and energized 14 exahash of installed hash rate. And that takes their total now to 24 exahash with an average fleet efficiency of 16.4 joules a terahash. Only IREN and CleanSpark can actually beat that at the moment. CleanSpark can around about 16.1. IREN we know as the lead miner in this efficiency realm of 15 joules a terahash, but 16.4, that gives you great opportunity to improve mining margins. And bear in mind, they've also got, being based in Texas, they'll have a really good rate of energy there as well, probably similar to what IREN and Cipher are able to achieve. So look forward to seeing those first quarterly results showing that new 24 exahash. That's an amazing feat. And I must admit, we said this yesterday on the podcast, the shareholders have been waiting a long time for, HUD 8 to, raise that hash rate. They were, 4 or 5 years ago, one of the biggest miners. They had a hash rate, not too dissimilar to the likes of Riot and Mara. And we saw those two miners go off and use the ATM to great effect to grow the company. And HUD 8 were a little bit more reserved, not growing the hash rates quickly, focusing on Ethereum mining as well at the time. But when that stopped there, they sort of lost their way a little bit. Then we saw the merger and acquisition with US BTC, and the rest now is history. And this is what we want to see, these type of updates, really good updates, solid update yesterday with the listing, and now today announcing that 24 exahash. That gives ABTC this dual strategy of mining cheap Bitcoin, far cheaper than the likes of Strategy are paying for it, and then also having a treasury management system in there to also grow that Bitcoin treasury hodl.
Yeah, valuation on ABTC is a bit of a head scratcher. People were paying $13 plus yesterday for 10 exahash. Today they're paying $6.40 for 24 exahash. So a little bit interesting dynamic there. We talked about Sue Ennis's post, whether you want a proxy to ABTC or HUD 8 as the holding company there. I believe 65% approximate ownership of ABTC. So let us know below which of these two strategies are you taking, if any, invested in those two stocks. The final one, or member we're looking forward to hearing an update from, Sam Tabar. We had him on again talking about Bit Digital strategy, but as I noted in the intro, listed as the CEO of WhiteFiber only here. So it'll be interesting to get an update on the WhiteFiber division. We actually went over to their website, pulled a few slides from their most recent investor deck, taking a look at their portfolio here, and going back to our comments around Atlanta, Georgia for CleanSpark. they're finding a way to make it work with some of these smaller sites in great locations.
Yeah, and to be honest, they were the first miner to have any significant high performance compute deals on the table, and we know that IREN and Hive were sort of like starting from a very slow start, but Bit Digital, who the main company, actually landed that $50 million deal very early on, and they've sort of grown that from one client to now 23 clients, and you can see there. They have now 16 megawatts online, with 76 by the end of next year, and a potential 1.3 gigawatt pipeline. They've already deployed 4,500 GPUs and now 23 customers. That's a massive increase over this last sort of 12 months from 1 to 23. And look at the strategic relationships they've got there with Nvidia, Dell, Cerebras, Supermicro, and HP. Some really big hitting names there. WhiteFiber aren't going away too soon either.
No, they're certainly not. And we meant to ask Daniel Roberts about that NVIDIA preferred partner, which other companies in the space have that accreditation, but you can see NVIDIA listed as a strategic partner here. If you look at the data center portfolio itself, whether you're talking about Montreal 1, 2, or 3, these are all sub 10 megawatt gross sites. But again, based on the proximity to these urban areas in Canada, being Toronto and Montreal, or in the case of potentially CleanSpark, Atlanta, Georgia, again, the need for latency, high-speed connectivity, it's obviously there.
Yeah, and they're doing things on this scale, and it works, and they're delivering. And we've seen in the latest earnings update now that the actual revenues from HPC outweigh the revenues from Bitcoin mining, and Sam's very clear. I think he wants to offload the Bitcoin mining business. I think it's down to 1.2 exahash now. They're currently being hosted by Soluna Holdings, and I think we might see in the next few months an announcement maybe to sell off that part of the business, use the capital raise from that to grow their portfolio quicker. But yeah, you're right. Some three small sites there. The NC1 site there, 99 gross megawatts. That's potential to be a little bit bigger than the other ones there. But the IT load at the moment, 20 megawatts compared to 5 and 3 megawatts for the other three facilities. But they've got the customers, so it's all right saying we can build it. Will they come? Well, Bit Digital and WhiteFiber have got the customers, and now they're building out these facilities.
Yeah, good point. So interesting to watch this industry evolve, the different strategies we're seeing, the large hyperscaler co-location strategies with Riot or maybe a Horizon One or a Childress. We're seeing some of the vertically integrated strategies, both on a smaller scale here with Bit Digital, with Hive, and then on a larger scale with companies like IREN and really everything in between. So as we like to say, hindsight is 2020. It'll be interesting 2-3 years out from now to see which one of these strategies ultimately was the most profitable. I know you have concerns about equipment depreciation and CapEx. So we're starting to see a couple different options or choices emerge here in terms of strategy. At this point, which one do you feel is going to be ultimately the most profitable?
From what I've heard, and we've heard some really good arguments for both strategies, I still feel, and I've said this on the podcast previously, that the co-location deal provides less risk to the actual company. You go out there, you have to be able to build the data centers. You've got to prove that before you even get a contract signed. So you'll have to line within a partner who's got credibility of building data centers. But if you can build the data centers, the contracts tend to state what the revenue is going to be during the life of that contract with possible extensions. And as long as you deliver what the contract says, you'll get paid. And, yes, it's fairly consistent revenues, but it's fairly consistent high revenues when you compare it to Bitcoin mining, what we've seen over the last few years. Very few miners are making a profit every quarter. In fact, we had one CEO on recently who said in the last 8 quarters, they'd only had 2 green periods. That's not great for an industry. And that was actually a mine that's, I would say, in terms of financial performance, at the higher end of the financial performance. And if they can only achieve 2 profitable periods out of 8, that says something for the industry. High performance compute, a lot of these are going into this industry, it's still a fairly new industry, but a lot of them are going in there because they're seeing these predictable numbers, and Wall Street And the financial institutions, they like predictability. They can't stand the volatility of the Bitcoin itself because, as we've seen on our charts, even this week, the price has been going up and down between that 108, 112, 113, back to 108. You just don't know where it is going to be day to day. And the mining stocks pay the brunt of that because their volatility is even higher. So I would go down the co-location route for me, that predictable revenue straight there. You don't have any risk of having to buy GPUs. I don't know how long these GPUs last for. Do you, Bryce? I really don't. The H100s have been out for a couple of years now, and we're already talking 200s, B200s, B300s, Blackwells. There seems to be a lot more machines coming to the market that are better than the last machine, cost more than the last machine. But what do you do when you've bought a fleet of GPUs? Do you start refreshing it quicker than the time it takes to pay back the original machine? Are you able to? Do they hold their value to sell them so you get your money back and then put that money into the more efficient miner? Put that money back into the more efficient GPU? These are all questions that I don't know the answers to. So for me, co-location, having risk taken away by not having to worry about GPUs, just focus on building data centers. Most of these miners, they build data centers. This is what they do. Now, the HPC data centers will be a little bit more challenging because the cost of building one of them, as Patrick said yesterday, 20 to 25 times more expensive per megawatt to deliver a HPC data center than a Bitcoin mining data center. 400,000 to 8 to 10 million per megawatt. That's a big difference. And that itself takes a lot of doing. If you're going to start buying GPUs on top of that to fill that data center, you're into the tens of billions of dollars required to deliver this. And these companies aren't valued at tens of billions of dollars yet to deliver that type of capital. We've seen a few that have grown. I mean, IREN were over $8 billion at the end of last week. To grow to a company that maybe $20, $30 billion to get this investment to grow their GPUs, that's going to be a bit of a challenge. Even if you've got, the latest addition to the team there, Anthony, who's, great in the capital markets, it's going to take some work to get around that.
Yeah, it certainly will. Again, time will tell here. I tend to land on the other side of the equation. Fortune favors the brave. I think AI GPU compute is going to be massive. I think first mover advantage is going to be massive. And I think companies like IREN ultimately are going to find a way to succeed. But at this point, like you say, there are a lot of question marks in terms of how that's going to look and what the upgrade or refresh cycle looks like. I always think back to when flat screen TVs came out and the amount of innovation, how quickly the screen got bigger and how quickly the price got lower. It'll be interesting to see anytime a new technology like that is put forward, the rate of change in the industry. So as you can see, a lot to talk about, a lot to be excited about in terms of this panel. Tyler Page, Matt Schultz, Asher Janut, Salman Khan, Sam Tabar, we've had them all on the channel. Looking forward to each and every one of their remarks. Also looking forward to getting an update on Galaxy, which we don't cover closely, and Core Scientific, which has been pretty quiet. The final piece we wanted to leave you with, you talk about some of the challenges, the uncertainty in the Bitcoin mining space. We bring up Hashrate index. This is not looking great. Hash price down, hash rate flirting with 1,000 exahash on the 7-day moving average, and a difficulty adjustment today moving the wrong way for the miners.
Yeah, that difficulty adjustment looking to be over 5% when it actually occurs. It's 5.51 at the moment. The reason it's 5.51% is it's taking 32 seconds quicker than it should do to actually achieve the block. The block's supposed to be 10 minutes. It's taking 9 minutes 28. That needs to be reset at 10 minutes. The only way you can do that is making it harder for miners to mine. And if you make it harder for miners to mine, it means their production's affected. So they'll actually start receiving about 5.5% less in terms of Bitcoin mined until the next difficulty. And that's the challenge we've talked about. That's a big challenge. In a month there, the production changed by that much there. We look at the 50% reduction in 50% reduction in rewards every time you have a halving. I think the difficulty adjustment is far too underestimated. This is even worse than the halving because this happens probably quicker than that halving adjustment does, which happens every 4 years. If you look at what the difficulty's done in the last 2 or 3 years, you'll see what I mean. Now, you're quite right to say the network hash rate is now very, very close, literally 7 exahash from breaking through that 1,000 exahash from a 7-day moving average. We talked about it's been well above the 1,000 exahash on sporadic moments in time, and it's been as low as 600 exahash. But to have a 7-day moving average so close to 1,000, this is effectively, we're talking all-time high from a 7-day moving average perspective there. In terms of fees, that's increased a little bit more fees for miners, 1.3%, but nowhere where it needs to be. We need to see that fee percentage increase if there's going to be any sort of real business in the future for these public miners to make a reasonable margin and, deliver exactly what they're supposed to do, which is make that blockchain secure and carry out them audits, 24/7, 365 days a year.
Yeah, interesting point you bring up, difficulty versus halving. The comment I'd make there, at least the miners know when the halving is, the date it's going to be, the overall impact. You're right in saying difficulty. It's a gradual burn that gets you day in and day out, and there's not really a rhyme or reason to it. Just depends on the number of machines and hash rate on the market. So with that being said, an interesting podcast today. Again, make sure you check out yesterday's visit with TeraWulf. We're heading off to New York on the weekend here. We'll be back tomorrow with our regular podcast. Let us know if you're in the New York area. You'll be around PubKey. We'd love to meet up throughout the week. Hit the like button. Feel free to subscribe. We'll see you back here tomorrow.